Video number 4 relating to the cash flow statement, and here in this video we are going to discuss the treatment of some additional information in the cash flow statement. This is also can be called as the identification of the missing figures as well. So first let's understand when we are supposed to use the working note or prepare the working notes while preparing the cash flow statement. So remember children, whenever in case of a question, when you get more than two information regarding one specific item, so hence it's understood that we are supposed to prepare the ledger account or the working note for it. Okay, so that's what it said. For example, if I'm having a opening balance of machinery, closing balance of machinery, even the question gives me information. For example, the machinery is being sold during the year or being bought during the year, some machinery is being bought. So in such a situation, when apart from the opening and the closing balance, any other additional information is given in case of any asset, so hence it's an understood thing that we are supposed to prepare the working note in the way of the ledger accounts. So one such common working note which we generally we will see in the cash flow statement while preparing it is the accumulated depreciation account or the provision for depreciation account. So let's deal how to prepare this accumulated depreciation and provision for depreciation account. So children, you know it very well, like by nature the accumulated depreciation or the provision for depreciation is a liability, and you know that the is generally they give the credit. Words, if the liability increases, you know that it's credited. Okay, so that's the reason you can find it here always all the liabilities accounts, if you are making especially the ledger accounts, it starts from the credit side. So that's the reason I have written here as by balance brought down opening balance or the previous year. What does this previous year basically stands for? Suppose if I have been given the balance sheet with the 2012 value and 2013 value, so 2012 will be called my opening balance or previous year, and 2013 will be called as my current year or my closing balance. Okay, so therefore on the debit side I'm going to write down as two balance carried down. Now why actually the closing balance is written on the opposite side? Because the basic motive of preparing the cash flow statement is to identify the transactions which is taking place in the business, you know, during the year, finally due to which our closing balance is this much. So we need to find out the difference between the opening and the closing, you know, which is a result of the transactions taking place in the business during that very particular year. You know children, in case of the depreciation, there may be a possibility if you are selling an asset, so for that particular asset which is being sold, if it is being sold in between the year or at the end of the year, we need to charge up the depreciation. So if we are charging up the depreciation on an asset which we are selling, it will be coming on the debit side. What is the basic reason? Because you know the journal entry for charging the depreciation is depreciation account debit to fixed asset account credit. Okay, so therefore like actually you know we are showing it on the debit side here, that is two fixed assets, and which means depreciation charged on the asset which is being sold. Similarly, all the depreciations which is charged throughout the year, you know, it is written off by transferring it to the profit and loss account. This is what we use to pass a closing entry, by transferring it to the profit and loss account. And the closing entry generally which we need to pass it, that's what we call it as the profit and loss account debit to depreciation, which we have seen it in the previous year. So therefore all the depreciation charged during the year, you know, that is actually it is being shown here on the credit side as per, because you know it's an actually that is can also be referred to here as the statement of the profit and loss as well. So children, maximum these are the basic four items, you know, max to max you can have it regarding the accumulated depreciation account or the provision for depreciation account. Now out of these any one information will be missing, and you know that you need to identify it and you need to find it out. Let's see how. Like for example, if I have been given with the opening balance, I have been given with the debt charged during the year, that means by profit and loss account on the credit side, and apart from this let us assume I have been given with the closing balance as well. In such a situation, if my credit side is more in comparison to that of the debit side, so therefore the deficit comes on the debit side will be called as my balancing figure. Okay, it can be vice versa as well. For example, if I've been given with the depreciation charged on the asset being sold, if I've been given with the closing balance, and let us assume is if I've been given with the opening balance, in such a situation, you will find your debit side being more in comparison to that of the credit side. And if the deficit comes on the credit side, it will be called as what? That is by profit and loss account. So remember children, out of these four, any of the information may be missing, and depending upon the need of the question, you are supposed to calculate it, that any kind of the asset of any kind of the value based on that. Now the next here, after that, we are going to discuss about the fixed asset account, because see, when the depreciation is there, so it's understood that we will be having the fixed assets also, because a depreciation term and the fixed assets both are complementary to each other. If we are having a fixed asset, so definitely the depreciation has to be charged on it every year, so therefore the assets can show its true and fair value there in the balance sheet, as it's a rule as per the act. So fixed asset account, if we are making it, so it's the same that of a ledger. So the format will be like this, and that assets generally they used to give the debit balance. In other words, it can be said like that: if assets increases, hence it is debited, and if asset decreases, hence it is credited. Okay children, so therefore that's the reason we are showing the opening balance on the debit side as to balance brought down. Okay, so balance brought down means that is the previous year's balance, just as we discussed in the above case. Okay, and the closing balance definitely will be there on the opposite side, so therefore we can find out the difference between the two and the causes responsible for causing that is the differences in the opening and the closing balance. So it's shown on the opposite side here. And now the next here it comes is that is if the asset is being sold. Generally children, the asset is being sold means it decreases the value of the asset. So generally if any asset decreases, the rule, it has to be credited, and simultaneously if any asset increases, it has to be debited. That's the reason the sales has been shown on the credit side of the fixed asset account. Similarly to bank purchases, it means what? If you're buying an asset, it means it increases the value of an asset, and the rule of the asset, debit increase in the value of the asset. This is the reason it is shown on the left hand side, that is on the debit hand side. Now see, whenever we are selling an asset, so there may be a possibility that the firm can have either a profit or a loss. So suppose if a firm is having a profit, so definitely it will be shown on the debit side. Simultaneously the firm can have a loss as well, so it will be shown on the credit side. But remember children, at a time, out of the profit and loss, the firm will be having only one thing, either the loss or the profit. If it comes the loss, so definitely it has to be shown on the credit side, and if it's a profit, then it has to be shown on the debit side. But simultaneously both the things, profit and the loss, won't be appearing at the same time. Okay children, now these are the maximum information, that's what we have collected regarding any particular asset, if it exists with the firm, or if it is there with the firm. Now the next important information, one more I would like to add up here is, suppose if there is no direct information and the question has been given regarding the profit and loss of the asset if it is being sold. In such a situation, we have already studied, we can use this formula to calculate it. What is the formula? The profit and loss is equals to sales minus book value or written down value. So children, let us understand what is this book value and written down value, though we studied about this in class 11. So here book value or written down value is equals to cost of asset minus depreciation on asset. When out of the cost of the asset every year, when we charges the depreciation, the value of the assets get reduced. So if the same value, we need to show it there in the book. So that's what we call it as a book value or written down value. Hence the book value or the written down value is being given. So it's an understood thing that the depreciation is already deducted out of that. Okay children, so if suppose there is no direct information about the profit or loss has been given, so we can use this formula formula as well to calculate the profit and loss as well. Now, out of these information which is given to us in the fixed asset account, any one information can be missing, or definitely you will find any one of the information has been missing, and you need to search and you need to find out that very particular information after balancing the ledger account. That's the actually the main purpose of preparing the fixed asset account in the cash flow statement. Let us assume, like for example, suppose if I've been given with the opening balance, I have been given with the purchases. The question gives the purchases as well. The question gives the value of the profit, and the question gives the value of the depreciation as well as the closing. See, if the question gives you the profit, so the question won't be giving you simultaneously the loss as well. So in such a situation, if my total of the debit side is more in comparison to that of the credit side, so the balance or the deficit coming on the credit side will be called as what? It will be called as my balancing figure. Similarly, this can happen to that of a purchases as well. Let us assume the question gives you sales, the question gives you the value of loss, and the question gives you the value of the depreciation, and the question gives you the value of the opening balance and the closing balance as well. Children, if the loss is given, then you won't be having a profit. So in such a situation, you will find the credit side's total be more in comparison to that of the debit side. Okay, so therefore the deficit, if it arises in the debit side, will be denoted with the term what? That is purchases. Okay, it will be denoted with the term to bank purchases. That will be the balancing figure. So children, you will be able to identify this only after balancing the ledger account, that is which item is missing and what will be its exactly its value. And how to balance a ledger account, that's what we have already studied. So the same thing can appear it in this very particular. Now children, the next important thing here we are going to discuss about, though being different items has been given in the form of the two ledger accounts. Now how to deal or to treat these specific items in the cash flow statement, this is what we are going to deal next. So therefore the fixed assets, that is the depreciation on the top, it's written here, the depreciation which is charged on the fixed assets, this will be shown where? This will be shown in case of the accumulated depreciation or the provision for depreciation as in the fixed asset account, on the credit side. Remember children, so this item has got only two effects. Once it will be shown on the debit side, and the second, it will be shown on the credit side of the fixed asset account as accumulated debt and provision for debt. Okay children, now the next thing here it comes is what? There is no further treatment relating to this. Okay, it will be shown only in the fixed asset account. Suppose if I got a value of 10,000 for the depreciation charged on the fixed assets, remember the same value with a different name, 10,000, it will be transferred here as well. Now the next children here it comes is, you can see it here, the profit and loss account which is being given here. This profit and loss account's value will be shown in the CFS, stands for cash flow statement. It will be shown in the cash flow statement in operating activities under the heading plus non-operating expenses / non-cash items. So children, there may be a confusion. Suppose if this profit and loss account has been given and the value of the depreciation charge on the fixed asset is being given. When these two things are being given, remember by statement of P&L, the value which is being written will be shown in the CFS. So during that time, you won't be showing the value of the depreciation charged on the specific fixed asset which is being sold. Okay, now if when the question won't be providing you with the detail of the depreciation charge during the year, if it is not being given, then in such a situation, this depreciation charged on the asset, which you can see it on the debit side, can be shown under the heading plus non-operating expenses / non-cash items in the cash flow statement. Okay children, now the next here it comes is, we are going to discuss about furthermore items, like you can see it here is what? Purchases. The purchases, as you know that the purchase of the fixed assets will be shown in the investing activities as a deduction, as minus. What is the basic reason? Because it leads to outflow of the cash. Similarly, if we are having a sales, it will be shown in the investing activities, means sales of the fixed assets will be shown in the investing activities as what? Inflow of the cash as plus. Okay children, so therefore we have seen it here, like how to deal with these items in the cash flow statements, even if we are making up the working note. Now the next item the remaining item, let us deal how to deal in the cash flow statement is, here comes the profit. We have, you can see in the fixed asset account, that is on the debit side, the profit and loss, the profit is being given. This profit will be shown in the cash flow statement in the operating activities section as minus from the non-operating income. And you can see it here, the loss is also there. Suppose if you are having a loss on the sale of fixed assets, so this loss will be shown in the operating activities under the heading plus non-operating expenses in the cash flow statement. Okay, so children, we have covered all the items, and remember, there is no specific treatment for the opening and the closing balances. If this many information has been given, or if you are making up a working note, then it won't be taken it in the cash flow statement, because their net result is identified through the way of the transactions happening during the year. Okay, so no opening balance and the closing balance will be shown, or their difference will be evaluated in the cash flow statement whenever we are making up the ledger account. Okay, children, so therefore now let's understand that is the application of the concept which we have seen earlier through this very particular question. So this question number 1 says, X Limited has plant and machinery whose written down value on 1st April 2014 was rupees 15,40,000. That means it's the opening value, we can say it here. And that is on 31st March 2015, 19,10,000 is given as what we call it as its closing balance or the current year's value. And the depreciation given, which is charged on this very particular asset, is how much? 1,50,000. And during the year, the question gives us that the plant has been sold for rupees 2,20,000. And already the book value of the plant has been given to us as 3 lakhs. So children, we have seen already the format here. On the debit side, we can have it here as that is the to balance brought down. This to balance brought down is called as what? That is the opening balance previous year. We have seen it here. All the assets account, it gives the debit balance. So that is the reason it has to be written here as that is the to balance brought down, opening balance of the previous year. And next here it comes is, we will be having here what? That is actually the opening balance given to us in the question is how much? The previous year, 15,40,000. Now let's write down the closing balance. Okay, we have seen as per the format, it comes on the credit side. So the value for the closing balance given in the question is how much? For 2015, it's given 19,10,000. So the format, already we have gone through the format. So whatever the information available to us, let's just actually put it down in the format, and let's see whichever the figure is missing, then we can identify it through actually ledger balancing. So here we can write down the sales has already been given to us is 2,20,000, and the written down value is being given here. So therefore it means actually we need to identify the profit and loss, as we cannot see the direct value of the profit and loss has been given, but they have given us the depreciation, how much? 1,50,000. So as far as the format is concerned, we have written this. Now the next thing here it comes is, that there is no direct value for the profit and loss has been given, but all the necessary information has been given through which we can calculate the profit and loss account. So how calculate the profit and loss account? We can use the formula. The profit and loss account is equals to sales minus book value. The sales is given as 2,20,000 and the book value is given to us as how much? 3 lakhs. So children, the book value is more than the sales. That means we are getting the answer in negative. Negative means it's a loss. Okay, if the sales is more in comparison to book value, it will be called as a profit. If the sales is less and the book value is more, then it will be called as what? It will be called as the loss. Hence, we are having a loss of how much? 80,000. So children, we have seen it here. The loss means decrease in the value of the assets. Hence, it should come on the credit side. So that's the reason to profit and loss account, the loss, we will be showing it here 80,000. So all the maximum informations whichever available to us as per the question, we have written it. Okay, so therefore now we have done the total. You can find it here. The total of the credit side already been written 23,60,000, and I have written already the total of the debit side as 23,60,000. But originally, if you will see, the debit side total is not coming 23,60,000. There is a deficit on the debit side. Okay, this deficit on the debit side, already we had 3 items. One is the profit, purchases on the debit side, and the opening balance. Opening balance has been given. Profit won't be coming because we had a loss on the credit side. So definitely, which is the missing item over here? That is for the purchases. So hence, the missing figure will be called as what? That is the purchases, and its value will be 8,20,000. So how we got this value 8,20,000 here? You know, the total 23,60,000 minus 15,40,000. This process is what we call it as balancing of ledger accounts. You know it very well. Okay, so therefore 23,60,000 minus 15,40,000. You know, that's what we are going to get the value of the purchases as how much here? 8,20,000. So children, the missing figure in this question we identified here is, that is in the form of what? In the form of the purchases. Okay children, so one more question here for your and better understanding, that is the question number 2, where we are supposed to prepare the two ledger accounts. Okay, so the first is, because see, we can see machine about the machinery also. There is more than two information. The first, the opening balance is given to us of 2019 and 18 closing, both the things it's been given. Apart from that, additional information, it says we have sold the machinery as well. So you can find it more than two information means, therefore we need to prepare the ledger account. Similarly, for the depreciation also, you can find it opening balance and the closing balance has been given. And apart from this, accumulated depreciation value is also been given here for 40,000. So let us first prepare what? Accumulated depreciation account. So children, we have seen already the format for the accumulated depreciation, which can also be called as the provision for depreciation account here. Okay, so children, so as per that, all the liabilities gives a credit balance. Hence the opening balance, you can find it on the credit side. Opening balance means the previous year. That is how much? That is 10. You can say that it's 1,40,000. Similarly, the opening balance, we have written it here. The closing balance, definitely it will be on the opposite side. So therefore we can, on the basis of the difference, we can analyze all the transactions happened during the year. So the two balance carried down. So what's the closing balance? It's given here 2,10,000 just for the depreciation. Okay, we are supposed to take. Now the next is the depreciation charged on the fixed assets. You know, its original place is where? There on the debit side. Two machinery. So we can write down the two machinery. What is the value of the depreciation? We can take it here is 40,000 as it's given to us in the question. So children, as I told you, you know, the three information is given. The maximum items in the accumulated depreciation account is 4. Out of that, the three information has been given. So therefore you can find it. There is some item missing on the credit side, and that item is called as what? By statement of P&L. Okay, even if you do the total, you can find actually the total of the debit side also being more in comparison to the right hand side, that is the credit side. So therefore, you know, let's find out the balance. This balance will be denoted as what? By statement of profit and loss account, which means depreciation charged during the year. Hence, what is actually, you know, the balance we are going to get it 1,10,000. How we got this value? 2,50,000 minus 1,40,000. So hence we can get the value here is 1,10,000. This is the process, you know, which we call it as a balancing of a ledger account. You know it very well. Okay, so based on this, we identified here the balancing figure, you know, for this very particular question is how much? 1,10,000. Okay, children, so we made the accumulated depreciation account. Now the next we are going to make up what? We are going to make up the machinery account, because for the machinery also the information given to us is more than 2. Hence, let us discuss here how to make the machinery account. You know, machinery being an asset, so therefore all the assets shows the debit balance. Hence on the debit side it has to be shown here as what? 2 balance brought down. And you know, the value which we are supposed to take it here is how much? The previous year's value 10,55,000. And on the opposite side we will be writing here is what? That is 2 balance carried down. That is actually how much? That is 16,75,000. And you know, that is actually definitely let us assume that is we need to find out the value of the profit or loss of what? The loss is 10,000. It's given to us in the question directly. That's the reason it's been written here. And you know, accumulated depreciation also given us in the question directly. So let's write down here 40,000 here. Okay, so children, now the next thing here it comes is, though there is no direct information regarding the sales is being given, but we can calculate the sales. So let's use this very particular formula to calculate the sales. Okay, what is the formula? The same formula for the profit and loss we can use. The profit and loss is equals to sales minus book value or written down value, which we have seen it here. So based on this information, let us substitute the available values. Okay, so children, we are not having a profit, we are having a loss here. That's the reason in the equation you can find it here, minus 10,000 written is equals to sales, let it be like that, is minus 80,000 minus 40,000. Why it's been done 80,000 minus 40,000? Because 80,000 is the cost. Okay, 40,000 is what? That is a depreciation, and we want the book value. So that's the reason it's written 80,000 minus 40,000. Hence the book value we got here is how much? That is 40,000. Okay, so already this 10,000 on the left hand side is in negative, and 40,000 here. So let's transpose this in order to get the value of the sales. So we have transposed this. You can find it here. That is actually the 40,000 being brought onto the left hand side. So finally minus 10,000 plus 40,000, the value of the sales, that what we got it here is how much? 30,000. So let's just substitute the value of the 30,000 which we have got it into this machinery account. So hence here it comes as 30,000. Okay, now there is no other option. We can calculate the value of the purchases here. So it will be calculated through the way of the balancing. So let's do the total. So you can find it here, the total of the credit side I have written well in advance earlier, but you need to write the total at the end of the year only. So the total which I got here is how much? That is 17,55,000. Okay, and the debit side total already, it's running short of, so deficit on the debit side. So therefore it will be denoted with that of the purchase, because there are only exist three items on the debit side. One is opening balance, the second is the purchases, and the third thing here it comes is what? The profit. When we are having a loss, so definitely there is no scope of profit. So hence the balancing figure here will be denoted as what? It will be denoted here as the purchases. So the value of the purchases here will be 7 lakhs. How we calculated or how we got this value? 17,55,000 minus 10,55,000 is equals to 7 lakhs. So children, so we have calculated the machinery account and we have got all the necessary and required information, which is needed as per the cash flow statement through this very particular ledger account. So the next is actually these items needs to be posted in the cash flow statement when you are making up the full-fledged cash flow statement. I hope so. This concept is very clear to you, isn't it? So therefore, how to identify the balancing figure and how to prepare, especially the accumulated debt and the provision for depreciation account. So therefore, you will be getting the assignment questions relating to these very particular concept. So kindly get done the assignment, just submit it on time. So therefore, like you can be given the marks accordingly based on that. That's all children here. So therefore, let us actually wind up with this.